on the story behind that parabolic spike and the whipsawing, and of course why this happens and what we can prepare for the next things. All right, and lastly, we're going to go through the key market event and the key market focus for the next week. So it's something like market week ahead. Okay, we can so that we can be fully prepared for what's coming next. All right, so the first thing, okay, so let's start with our first thing for today, which is the post-FOMC. So what exactly did the Fed deliver in this meeting, and how should we interpret it? So basically, we have like summarized up a few key important points for the meeting. So the first thing, of course, is as widely expected, the Fed decide to hold rates. So it's the same things, 3.5% to 3.75% hold. And of course, the real focus is actually on the statement itself, and specifically would be on the Fed economic assessment and comments. Right, so this is the one of the key things that we will look at for the January meetings. Right. So the first thing, of course, on the growth part, so they have upgraded their view on the economic growth from moderate to solid. So this is one of the key reasons. One of the reasons why they upgrade their view is because of course, if you see we look at the GDP recently, so the market is, the economic growth is quite strong over the US. So this is, consider effectively clear the recession worry. Okay. So the second thing, of course, on the employment part, so they removed the previous warning about the downside risk in labor markets. Instead, they note that the labor market is now showing the sign of stabilizations. So of course, it's they mention stabilizations, but not resilience. So it means that there are still some things that we want to look at over the labor market. So this is the reason why the NFP next week can be very important and can be a very high impact if, let's say, the data came out a surprise one. All right. And of course, the last thing on the inflation part, so they also reiterate that the inflations remain somewhat elevated. So it means that they are still not really happy with the inflations, all right? So of course, as you can see, as we know, the Fed targets will be 2%, and the latest PCE, the core PCE would stood at 2.8 or 2.9 or something. So we're still way high above the Fed targets, right? So based on all these things, we could say that the Feds are actually very cautious and quite hawkish ones. So it means that they even like hints out they're not going to they're not going to cut until June at least. All right. And of course, the next thing would be the vote itself. So it wasn't, so we are seeing that 10 to 2 votes. So there are 2 dissenter over the votes, which is the Governor Waller and Myrons that vote against the whole. So they're actually preferring 25 basis point cuts. But despite the dissents, the market is, the majority is firm. So according to Powell on his statements, they are saying that basically they are not considering any cuts until the data force them, right? So this is one of the key important message from the Powell statement over the January meetings, which is the hint that based on the current outlook, we might not see any cuts until June 2026. However, he also does, he does emphasize that everything's still strictly based on data dependence, all right? So it means that if, let's say, we are seeing the data, the US economy, the US data is not performing well, we could still see an early cut. But until that, most likely we're not going to see any cuts until June. So it means that on the March and April, so forth. Okay, so why did, so the first thing is, of course, if you look at the dollar charts recently, so we are seeing that dollar actually has been on a very aggressive downtrend. It's off, it's very strong. So to understand what might happen in the futures, first, of course, we must understand what are the driver behind that got us here, okay, with the US dollar. So the first thing, of course, we are seeing the dollar weakness mainly is because of the dollar debasement. Okay, so the second thing is about the fear that push the investor flee the dollar and move into the hard assets like the gold. So this is the reason why we are seeing the gold is actually on a very strong uptrend until yesterday, right? And lastly, of course, what we couldn't ignore is the political pressure. So if you're seeing the headline about Trump and Fed, the Trump versus Powell. So it's basically, you can see that the Trump is actually putting a lot of pressures on the Fed. So even he mentions that before the FOMC this week, he even mentions that he even pressured that claimed that Powell is on the crime if he's not cutting the rates on this meeting, right? So, and of course, on the latest news, of course, he also mentions that he's gonna announce the new candidate for Fed, and he said that the person that he choose would be the one that favor for easing. So this actually puts some pressure on the markets, or put some what we call it, put some negative impact on the dollar, because the markets are worried that the political pressures and the Fed credibility is in doubt, and this cause all these things happens over here, cause the dollar debasement, and then markets, investors are fleeing from the dollars, moving into the gold, and everything is all these things. All right. So in overall, this is in one word. Okay. Basically, the reason why dollar is on a selling pressure is because of the eroding trust in the fiat currency, especially in the dollar. Right. So what's going to happen next? So for right now, what I'm seeing now is that after the Fed's meeting on yesterday, so I believe that we might have some reverse in the market catalyst. We might have some reverse, right? So the firm's hawkish stand from the Fed has actually effectively putting a floor under the dollars, means that putting a support for the dollar. So this is the reason why we are seeing the dollar is actually on a rebound on the Thursday markets, right? And also why the gold is on the rebound. So this is because of as if you go through our market insight, everything's on our website, we actually cover on this. So we are actually expecting the dollar might be going into a short-term rebound because of the Fed is actually now, on the firm hawkish. Of course, it's not a long-term one, but at least the hawkish Fed is actually putting the support for the dollar. And of course, with the rate cut pivots that has been delayed, okay, so this seems that the market is now pushing back the cut high. So this is considered one of the catalysts for the dollar to rebound. So we are seeing the short seller are getting squeezed, okay, and of course the dollars now could reclaim its status as a higher currency. Over here would be still on the 97 point. So this is still the major resistance for the dollar. So for the near terms, for the weeks, for the next week, okay, until the NFP or before the any surprise from Trump on the Fed candidates. So I believe dollar might go into a short-term rebound in the near term. Okay, so at least it could be retest 97 point in the near terms. All right. So in short, the dollar could undergo a period of rebound, but remain pressure below 97s, and the broad outlook still remain on a short. Short at the rally. Okay, so this is what our views on the dollar right now, right? So so this is what for dollar. Okay, so for gold. So beside gold, so let's talk about some about gold before we move on next. So next thing we're going to talk about the gold crash. So we see actually over yesterday the markets the gold plunged nearly $450 intraday. Okay, it's a strong move. Okay, we're seeing from 5,006 nearly. We see a record high of 5,006 during the Asian sessions, and then followed by a collapse to a low around 5,001. So it's nearly like almost like $450 of sharp drops. Okay, so what actually caused a move of this magnitude, right? So we want to know the reason why. So here is some of my view, okay, based on my understandings. So what are the reasons that cause the gold pullbacks, sharp pullbacks? All right. So here's a few things that trigger the collapse. So in my view, right? So I'm not saying this is from one, but I would say this would be the perfect storm of three key factors that caused the golds to have a sharp pullback, right? So the first thing, of course, is would be the Fed reality check, right? So we are seeing Powell have removed the what we call as the cheap money, okay, because they're not going to cut anytime soon, all right? So it means that the interest rate is likely to stay high until June. So with the cost of, with the high interest rates, all right, means that if you're going to hold gold, okay, which pay you zero interest, would become much more expensive, right? So this can be considered a fundamental argument for holdings the gold in the short terms. So of course, basically markets already priced in no cuts from the Fed. Okay, so Fed saying they're not going to cut and go plunge. That doesn't make sense, right? So this is basically just one of the reason. Okay, one of the catalysts that supports. That push the gold down. But this just provide catalyst. So what would the one that trigger it would be? I believe, okay, is the massive liquidity flush. So to be honest, we have to be honest, okay, the rally of the gold from 5,000 to 5,500 was largely driven by a pure FOMO, okay, fear of missing out. So when the gold is actually breaking 5,000, and everyone is talking about gold is going to go up, go higher, go into 6,000 or some things. Okay, so this actually like trigger a lot of retail traders come into the markets, right? So when the price keep going up, the market was actually overextended. So especially when after the Fed say that they are not going to cut, so there's some things that markets start to worry. So once the momentum turns, okay, once there's some big players or someone's or groups of people start to take profits, all right? So when they start to take profits, okay, we will see the chain reactions. So for those late buyer that's come out bought at the high, so when they start of pressure coming in, all right, it would trigger a cascade of stop loss and margin call, especially from those late buyer that go on high margins or go on very aggressive to chase the high, right? So when this happens, okay, when the stop loss was triggered, when the margin call was triggered, and opposite of selling pressures put down on the gold. So it's very simple. So once these things come in, liquidity flush, and then the Fed's providing a fundamental catalyst to not supporting the gold. So with the chain reactions, then we are seeing the gold come down. So this is what we commonly would happen, okay, after the parabolics high from an asset, okay, from an asset, including the gold. So this is the reason why, okay, I believe gold is actually happens after the pops, all right? So what we can expect next, all right? So what we can expect next on the markets, okay? So this is something that we would like to look at. Okay, so before we go into the technical outlooks for the gold, so let's go through some of the outlooks and some of the markets week ahead here. So what can we watch for the next week? I mean, what can we watch in the market for the next week? So we're going to cover on here, right? So at this point, all good, right? So let's see so looking ahead, I believe there will be three massive catalysts that we need to watch closely on next week. All right. So of course, for the first thing, it would be the NFP. Okay, for the NFP. So let's talk about NFP first. So just recall back, okay, what we mentioned just now. Fed basically just told us they are not gonna cut at the moment. Okay, so they are on data dependence. So as they mentioned, data dependence. So this is what makes the Friday reports a very important factor. okay, which is the labor market data. This is considered a huge political risk that looming. So, the latest news, okay, President Trump just claimed that he will be announced his nominee for the next Fed chair as early as today or next week. Okay, so we all know, if let's say you're actually updated to the markets, we all know Trump's wants a lower rate. Okay, so if the market sees that the new nominees is actually favor an immediate cut, okay, so means that this could trigger the unease amongst the investor. All right, so it means that the new chairs that's appointed is actually what would I say? I would say like controlled by Trump's. All right, so this would actually consider a threat to the Fed credibilities or even the independency. All right, so and I believe this would be causing a major reaction to the dollar as the trust in the Fed is tested. So this would be one of the reasons that could trigger a further downside in the dollar, right? So this is something that we need to be cautious of. Okay, so I would say this is more on a wild cards for the market next week. Okay, this is not like it's not a firm one, but could be a wild card. So we need to be get ready for or be aware of. Okay, and of course the last one would be the central bank week. Okay, we are seeing there would be ECB, RBA, and BOE on the next week. So for the ECB, I think nothing much is gonna happen from the ECB because basically the inflations right now are still not at the point that would have to be worried by the ECB, right? So I believe the ECB gonna maintain their same stance over the meetings in January. And for RBA, we're going to look at whether what's the next move after the high inflations, the stubborn inflations. So whether they're going to hint on more high, because in the statement earlier from the RBA, they're actually considering a high if necessary, if the inflation stay elevated. Okay, so we're going to see whether the RBA going to deliver a hawkish tone on this week. And also this is the reason why one of the reason why the Australian dollar is quite strengthened in recent. Okay, and of course on the weakness of the dollar, the AUD USD is actually on a very strong uptrends. All right, and for BOE, let's just see whether they're gonna hint on the next cut date. Okay, so basically, the three central banks this on the next week, not much going on. Okay, but mostly we focus more on the RBA and the BOE. All right, so this is the one that's going to impact on the next week markets. So what can we watch next for the markets? So here's some let's say here's some summary. All right, so for dollar, okay, is it going to be a rebound or going to go into a reversal? So for right now, I believe the dollars is more likely going to on a rebound, right? So as we covered on just now, so as long as 96-point hold as a support, so dollar might go into a rebound for near term, and whether it's going to be on a reversal, right? So I wouldn't say anything yet because as for now, we are more on a downtrend. Okay, so this is support. And this would be the major resistance. Okay, this would be the major resistance, all right? So, of course, we are seeing a sharp pullback right now, all right? Sharp pullback over here. So it means that there are actually a very strong selling pressure from over the near terms, all right? So it means that if, let's say, you want to go to like extend another upsides, going up further, going for a record high or some things, to be honest, okay, the odds or the probability is very low at this point, right? Because why? Because the reason we are seeing that there's strong selling pressure over here after a parabolic uptrend move, right? A strong pressure coming up. So it means that the markets need some time to digest the markets. Okay, so at this point, I wouldn't expect the market's going to go into a sharp rebound or even a sharp continuations right after the strong trends, right? And of course, with the 5,000 support or even 5,100 support hold, okay, and we are not likely to see further pullbacks, all right, at this point, okay, of course, okay, I believe that if let's say this level breaks, we are still might see a deeper pullbacks, but as for now, supports hold quite well over the 5,000. So as long as the 5,000 level hold, I would expect some period of consolidations in gold. All right. So if you're on a short-term trader, I mean you are a short-term traders or some things, right? So I would consider a range-bound tradings in near terms, right? So at this point, I would plot out two major zones. All right. The first zone would be on the 5,100s to 5,003, okay, 5,300s. So this is the major zone that we could consider, okay, to watch for. So you would consider a short-term tradings over here. Okay, as for now, we are seeing a pressure going down. So of course, we could still see some pressure down towards the 5,000 at this point. All right. So if let's say you're gonna go for a buy, so just wait for a short term. Okay, if you're using a what we call as the multi-time frame analysis, so you wait for a short-term reversal patterns from near the supports, then only you consider a buy positions, right? So at this point, we are still seeing potentially downtrends, I mean intraday downtrends toward the 5,000, all right? And for short-term resistance is on 5,003 to 5,240, right? So this is a major resistance. As we can see, there's a pressure building up over here, right? So this is the range that you would consider for a trading opportunity over the next week, okay, or even today, right? And for silver, same thing happens, all right? So for silver, okay, so now we are seeing, okay, some things that missed out on my charts. So there is a uptrend channel broken, okay? So right now we are seeing a downtrend. Selling pressure continue. Okay, 110 would be the key level, key psychological level for the silver, right? So at this point, anything below 110 would be a short, and the key supports will be on 100s, all right? But at this point, I believe there will be still a leg down to 100 level. Okay? I mean, if you're looking at the pressures, the price actions, everything. So even for silver, for gold, there could be still some pressure down to 5,000. So these something. I mean, there's still a volatile one. All right. So in overall, silver, okay, might be consolidates between the range for 110 to 100. And the broader range would be 117 to 100. And for gold, 5,000 support, okay, and 5,100 to 5,000 would be the major zones, okay, which is potentially we could mark for whether there's a reversal patterns over here to go for a long, okay. Otherwise, it's still on the broad for metal. All right. So the last one would be on. Okay, let's talk something. Let's talk a little bit over the yen. All right. So yen. Last week we actually we talked about yen, right? I wonder you guys was on the last week's webinar where we covered about yens, and we are seeing a potential yens reversal, and it happens. So I'm not sure whether you guys managed to catch the opportunities. So for this week, of course, the outlooks. We could still focus on yen a little bit if you would like to. So the reason why we are looking at yen is primarily because of the reversal patterns that we found, right? So let's take a look at the yens. Right. So for dollar yens, USDJPY, okay, right now there's a sharp pullbacks right now. So over here, I mean, if you're able to look at the trends, right? If you're able to look at the trends, there is a higher high, higher low, and a higher high, and higher low. And over here, the higher high, higher low uptrends is obviously broken, right? So right now we are seeing a strong sell-off, but as we covered just now, the dollar might go into a rebound, and we are seeing the 200 supports, I mean 200 year moving average supports, 200-day average supports rebounds, right? So what we're going to look at next is we're going to look for the resistance zones over this area, right? So over here, if let's say we are seeing a rebound here, okay, and the dollar yens are not managed to go beyond around 154 to 150. Okay, to be honest, okay, this would be the, I mean, if you're not looking at this, okay, let's remove this. So this is basically some of the key support, I mean, key resistance zone that we look at. So if over the near terms or next week, okay, if the dollar yens are unable to regain above this level, right? So we could see that the previous reversal, the trend reversal could, I mean, the bearish reversal could turn into a continuation, all right? So this is what we could look at for yens over the next week. All right, and then let's see, where's my, okay, another one is USD JPY, pound, the dollar JPY, sorry, the pound JPY, GBP JPY. So the same things, all right, here's the double top patterns, all right, and this is the range, okay, and then there's some things like the head and shoulder, right? So we're seeing head and shoulder from over here, head and shoulder, there's a head and shoulder, okay, potentially, and also a double top patterns over here. So right now, this would be the high of this shoulder. So let's see whether this resistant hold, okay, as a shoulder. I couldn't draw this. Let me draw. So I would say this is considered a head and shoulder patterns. Let me draw, yeah. So this is head and shoulder patterns, right? So I would say this would be the shoulder, but of course it's not a confirmed pattern because I mean theoretically we need the breakout of the neckline of 210 to confirm the reversal, right? But of course because we are seeing a double tops over here, and then this 212 would be the resistance and potentially a shoulder line. Okay, so these could be some things that you can look at. Okay, if you're an aggressive traders, so just look at it, see whether you would like to try some or some how. Okay, I mean we are just using purely on technical outlook. Okay, so this would be some interesting place. All right, so as long as you have a very good risk control. Okay, so this could be a something that for you to try on to bet on the reversal confirmations. All right, so can have a look at this. Okay, so you see the JPY as well. What about the Euro JPY? Where is my Euro JPY? It's not here. On mobile now, let me. It's not. Let me turn on the new charts. All right, it's almost the same things for Euro JPY. Okay, so yeah, but for you, but yeah, this is something that we need to cautious on. If you are not aggressive, I mean, if you're not willing to take like higher risk or some things, okay, so I would advise you like to wait for a short-term breakout, right? So like for example over here for the Euro JPY, okay, there's you could see there's actually a small range over here. All right, so basically this is a range bound over here. All right, so it depends on a trading methods, or it depends on a strategy. For some people, they would trade the range bound, right? So at this point, we are seeing the range bound over here, and this is the resistance. And over the broad trends, we are seeing a reversal patterns, all right? So over here, if let's say we're not sticking firm to one direction first, because why? Because the reversal haven't confirmed, all right? So what we could do is, because the Euro JPY is still on a consolidation trend, all right, especially on over the broad trend is still on the uptrend, right? So if let's say this level breakout and pullbacks, this will signal a a short-term bullish reversal. Okay, so means that over the near term we could still look for a buy. Okay, but if let's say you are like strong on shorts, because for right now, I mean, you're going for a long, I mean, if you're going for a, what we say, a swing trading, so right? So you see there's actually a bearish reversal or a bearish crossover in the moving average, even on the 4-hour charts. Okay, you could see some bearish crossover. All right, so these are some things that we consider to make positions if you're going to go for a short, right? So over here, it depends on what you're going to look for. Okay, if you're still on a, if you're like, you're not going to go for a short, okay, and then you are still very strong on the on the Euro JPY, so just wait for the breakouts. But because of the technical, it's actually showing a potential reversal. So you want to go for a short, so this is where you would consider for positioning, right? So for GBP JPY as well, for the, so same for the GBP JPY. Where's my GBP JPY? Okay, right here. Right, so there's some things. Okay, so we are seeing the range bound over here. All right, so ideally, let's just wait for the breakout to determine the next move. Right, so this is what you can do. Otherwise, you can just position yourself. Okay, so this is what we're going to cover for today. All right, so guess this is what we would be cover for today. So you guys still have any question would like to ask? See, someone is typing. Huh? Okay. All right. So, if there is no more questions, what's wrong with BTC? All right. Okay. For BTC, because I believe this because the lack of the momentums. Okay. Especially right now, we are seeing the latest the Clarity app, right? Correct. I'm not sure whether you look at the news. The Clarity app, okay, is postponed. All right. So means that especially on yesterday, we were also seeing the gold is actually on the pullbacks, and the stock markets on the pullbacks. So this could be I mean, as for Bitcoin, this kind of asset is more on like speculative assets, right? So when the market, excuse me, so when the market is actually lack of the catalyst for this kind of bullish trends, so when there's nothing good going on, this would continue to pressure the cryptocurrency, okay, especially when they are more like a speculative asset, okay. So when there's nothing much going on, there's nothing good going on the cryptocurrency markets, and the only positive catalyst would be the Clarity Act, which is now already what we call delayed, okay, postponed, okay. So there is nothing much of catalyst, right, to support the Bitcoin bull, right. So at this point, we are seeing a sell-off on the global market yesterday, including the US equity markets, and the worry of the AI, some things if you look at the news, okay. So this is trigger the selling pressures over the speculative assets, okay, which is include the Bitcoin. So what could be the next thing for the Bitcoin? Right now, of course, it's not ideal for you to go for a long, okay, because we are seeing the key supports has broken. It could enter a further pullbacks. So right now, of course, you can go for a short-term short over here. If let's say 85,000 is not able to hold, but if you are a long-term investor, I mean, not I wouldn't say long terms. I mean, if you're